Hi, good evening, everyone. My name's Kid Almond. Today we're going to be taking a short-term outlook on the stock market. Today is the 6th of May, and we're going to be looking at some observations. Obviously, none of this should be considered financial advice. Thank you, Benjamin Cohen, for being one of the best stock analysis on YouTube. And yeah, we'll kind of get into the video here, and I'll quickly open up TradingView, and we can look at some stocks here. But the first stock I want to look at, or I should say crypto I want to look at, is Bitcoin. And there's sort of an interesting thing going on. So we'll go ahead and look at this thing called the 200-day moving average. And for those of you who are unaware, the 200-day moving average, we'll kind of look at, it'll go at one point in time and look at the previous 200 days, and it'll create like a data point for those 200 days. And you can see these data points show this red line that you see here. And the observation I want to make about this is, if we look at recently, you can see that we're pretty close to hitting this line right over here. We're really close to colliding. And that has usually had important implications in the past. So right now this line is at 83,000. And actually today, I think Bitcoin hit 83,000 today. We're very close to this number. Very close. Let's see. Let's take a look. So I have some stuff pulled up here. Let's see where Bitcoin hit a high at. So we'll go here. We'll show up some candles. And we can see this little line right there hit almost exactly $83,000. So we got very close to this 200-day moving average. And the reason why I'm discussing this is because if we go back to the last midterm year, midterm year was 2022. We could subtract 4 years from 2026, which would give us 2022. And one thing we can see is when we got very close to hitting this line, I think we actually did hit this line. That kind of spelled the beginning of the end for Bitcoin, and we just proceeded to go down from that point. We just kind of went down. So that happened during the 2022 midterm year, but that's just one midterm year. So if we go back even further to 2018, 22 subtract 4, we get 18. So let's go to 2018, and you can sort of see this exact same behavior where essentially Bitcoin was hitting these lines, the 200-day moving average, and we proceeded to crash. We hit it again over here, crashed. I think we hit it here and we crashed again. So if hit history is any indicator, I think by next Saturday, I'm expecting that Bitcoin will kind of start its next move down. And I think this has a few implications. So on a previous video I made, one observation I made, is we can look at this. We can look at Bitcoin and the S&P 500. Oh shoot, I just broke my website. 1 second. We'll look at the Bitcoin and the S&P 500. And, it's not too difficult to see how they move together, it seems like. Both of them are chopping here. Both of them went down there, right? Both started climbing up here. And both kind of briefly dropped over here. And then, and the S&P went back and started chopping more, whereas Bitcoin just fell, right? Over here. And you can see they're both going up right now. So it's not difficult to see that the S&P 500 and Bitcoin, they seem to be moving together, right? I mean, obviously, it doesn't take a rocket scientist to see Bitcoin's going down right now. But one view that I've sort of articulated in this video, which, isn't very common, but, you can see right around here, Bitcoin was doing nothing for months and then crashed down. That reminds me of what happened over here, where the S&P 500 did nothing right there. Let me move my camera up. Actually, sorry, I think my camera is a little... that might be better. I tried to make that better. I don't know how much better it is. But you can see that S&P 500 went down, kind of in that same area right there. At least in my view. And, you know, if Bitcoin goes down right here, what if that predicts the S&P 500 goes down a few months later? We had this crash, then we had this one. So anyways, that's sort of an interesting thought I had, that I kind of want to share that. I don't think other people have, but I would argue if we see a drop in Bitcoin, I don't think it would take us too much longer to start seeing a drop in the S&P 500 up here. Oh man, this website's a little annoying sometimes. You can let me draw. Right around here, we might see the S&P 500 go down if we see Bitcoin going down. So that's one thing that I feel like might play out, actually. I'm curious to see if it plays out. But yeah, I guess we'll just have to keep an eye on that. I'm not really married to this view, but it's something interesting. Another thing too is, while I do think Bitcoin's gonna collide with the 200-day moving average and it's gonna go down lower. That's what I think is gonna happen. Something is interesting with the S&P 500 too. In a few other previous videos, I discussed the bear market and bull market bands. And what I was discussing, which was my view, is that commonly when you see the S&P 500 go below these lines, usually we might go up and then we ultimately crash down. We might test it again, go down. We might go up, and then ultimately we usually crash down once we go below those lines. You can see that pattern behavior there. You can actually see during COVID, we went below, we tested these lines, the bear market and bull market bands, and then we just went down further. Even in 2022, you can sort of see that usually when we went below these bands, it kind of marked the beginning of the end, where we just ended up tumbling down for almost an entire year. And so it was my view, I made a few videos on this, that over here, when we saw the S&P 500 go below these bands, it was my expectations that we would see the S&P 500 continue to go down over here. And as you can see, that's not what happened. It didn't play out like that. And, it's a shame because I try to make my analysis based on data, and usually this pattern usually plays out where once we go below these bands like this, we don't usually rise up above. It's not usually what happens, but I guess my view was wrong. I mean, you can see here my view was wrong. That was not a correct prediction. And the S&P 500 has been making really good gains. It's up 15%. Where you can see over here, Bitcoin wasn't even up. Sorry, the S&P 500 was not even up 1% for 4 months. For 4 months, it literally just did nothing. And that seemed like a bad sign to me. But, we see the S&P 500 going up, and that was sort of a bad call by me. But something that I did want to show is that if we go here to what's called the RSI, and this measures how fast people are buying a stock, basically. And you can usually see these red zones. Usually when there's a red zone, there's usually a crash followed afterwards. You can see it here. You can see it there. You can see it there. You can see it here actually too. There's a small crash over there. But you can obviously see points where the S&P didn't go down. I mean, right there. Right over here. So the RSI is not the best indicator in the world, I will say. But, just as often as it's right, it's usually wrong. But just because it can be wrong doesn't mean it's not useful. And there's obviously, you can see instances where, the S&P 500 is turning red and dips. You can kind of see that. And if we look at just the recent week, I mean, yeah, we're red. And not only are we red, but if we look in the behind the scenes data, we're very high red over here. My drawing sucks on this website. I wish I fixed that. But we're at a super high reading, and it's like, it seems that we have multiple variables kind of coming together, which could show that the S&P 500 could go down. Last thing I discussed in a few videos ago was this business cycle, and usually when we see this business cycle, these values dropping down like this, we usually experience a recession. That's usually how these have played out. And we don't see a recession until we go meteorically down, just straight vertical down. And as you can see, like, we haven't really had one of these vertical moves down. And the last time we did, we did see a major reaction in the stock market, which was this time over here. I think the stock market dropped 15 to 20% over there. But we really haven't had one of these rapid moves down. And because of that, we haven't had a recession yet. Like, that's usually happened when these values go down. Usually, when these periods have gone down, there's always been a recession. But we've just kind of been hanging out at the top longer than we've done in any period in history, at least as far as in the 1990s. But at the end of the day, these have all ended in recessions. And for those of you who don't know what this value is looking at, what we're looking at is basically, and we're looking at a combination of variables. So we're looking at interest rates, inflation, and unemployment. And inflation rates, unemployment, and inflation has all been going up here. And so usually that creates problems for the economy, and we end up crashing. So I think there's a few things that lead me to believe the S&P 500 could be in trouble. And I just spent 12 minutes talking about that, but now I want to talk about some defensive stocks that you could go into if the S&P 500 does have problems. So we're going to pull up the S&P 500, which is this right here, the S&P 500. And the last thing I want to discuss, actually, we'll go back to 2008. So we're going to go back to 2008. You can see in 2008, I feel like it's sort of similar to what we're seeing now, where we did crash for a moment at time, and then we zigzagged back up. And if you look right here, we were higher than the period over there. And if we go back to the current S&P 500, let's see how fast I can get there. It looks, this might look not the same, right? But what you have to remember is the difference here is what, let's see, like 400, what's it called? $400. But if you go back, to 2008, let's see, let me go all the way back to 2008. The difference between these numbers here was just 100, basically. Or we'll say 60. But this isn't percentage terms. We're just thinking in raw numbers, right? In percentage terms, this could be equivalent to what we've just seen. And even though the S&P 500 did end up going higher over here, I mean, you can see the S&P 500 did climb up. At the end of the day, it did eventually collapse lower, even though it made a new high. So, we went down, we made a new high over here, and then the S&P crumbled after that. So it is a sort of a pattern that you can see where, you know, the S&P 500 starts to go down, goes up even higher, and then tumbles down even lower. And it's possible we see something like this. I don't know if we're gonna just drop like this. It wouldn't surprise me though if we just slowly came down and then tumbled in the S&P 500. But the point of this video I want to talk about is more the defensive stocks that you can go into, which would protect you in case there were issues in the S&P 500. And I'm not showing you these stocks, and I'm not saying that you should sell all your stocks right now and get straight into XLE, right? This energy stock. But I think you should be aware that these stocks, you know, can be okay to buy if there are problems in the S&P 500. And if you think there'll be problems, then this is where you would go. But it's not difficult to see that, you know, the XLE was going up right here where the S&P 500 was going down. But if we look in recent history, let's look at 2022. I mean, you can see the S&P 500 was deteriorating over here, and actually XLE made a high right where the S&P 500 made a low, right? XLE is a high right here. The stock market was at a low. And then as the stock market kind of was going up, ended up taking this down, and we didn't climb that much higher. But as the S&P 500 hit another low over here, it continued to go up. So there are periods of time where the S&P 500 would go down, and usually that's where XLE would go up. Now, obviously, we didn't see this play out during COVID, but we can quickly go back to 2008. So let's find 2008. And yeah, this is pretty easy to see. But you can see XLE was going up over here as the S&P 500 was deteriorating. And so, I mean, you had several months, like almost a year head start to know things are not good in the economy. And we're still making money with that XLE, that stock. Last thing we'll show is the early 2000s. So the early 2000s, let's try to show this. You can see the early 2000s, the S&P 500 is crashing over here. And, you know, if you look at XLE, it was going up. It made a new high right here. This was the high. And that gave you kind of an opportunity to make money. Wow, it should have been pretty obvious that we were in serious trouble because of how the S&P 500 was acting. So we can see in the past, you know, 3 recessions, early 2000s, 2008, and 2023, XLE held up pretty well. So let me quickly get rid of these drawings. So that's XLE, but another stock I think you should look at is, there's another one, Moss, and I think this one is, I would do your own research, is fertilizer. And we can see basically almost a similar behavior. It shouldn't be too difficult to see, but you know, as the S&P 500 is going down over here, we can see the fertilizer stock Mosaic was going up. And you can see actually, I mean, Mosaic, I mean, it more than doubled, it more than 2x'd while the S&P 500 was deteriorating. And even if you didn't sell at the perfect time, you still had an opportunity over here, which is still close to a 2x actually. And even there, you would have still made money had you bought around the time, you know, the stock market began to crash. But even if you bought earlier, I mean, you were still in a good spot. But this is with 2023. You know, if we go back, let's look at 2008. We're over here next to 2008. And you can see, I mean, it's not too difficult, but, you know, the S&P 500 was collapsing. Moss, the fertilizer company, was going up. And then let's go to the early 2000s. The early 2000s didn't look so good, I will say. So I don't know how reliable the stock is going to be. But you can kind of see though, it's like the stock didn't really lose you. I guess I didn't draw that too well. Sorry, excuse me. Something like that. I mean, the S&P 500 was almost down 30% right here. Moss, on the other hand, was down like what? 5%, something like that. This one was down 30. So it does seem to me the stock could be in your favor. There's a high possibility this thing could go up. And the other kind of bullish thing for me is you can see we're kind of near this low area where we see the stock tends to usually go up from. And so this could be a good defensive stock. Last one I want to talk about is GD, which is a defense contractor. And the last thing I'll talk about with Moss is I think this is related. This is pretty heavily correlated with oil. So therefore, it's pretty correlated with XLE, I think. I would advise you do your own research on Moss. That's my understanding. I could be incorrect about that. The last kind of jeepers. There's a funky little drawing right there. The last asset we'll take a look at is GD, which is a defense contractor. Let me look up GD. General Dynamics. And, you can see, let's go back to 2023. 2023 going down, GD going up. Let's go back to 2008. I mean, you can clearly see 2008. We're going down. GD was going up. And even if you bought at the high, you would have lost none of your money. You would have lost zero, even if you bought at the high, if you at least sold later on. Assuming, you kind of did have a warning, a pretty good warning. You had 4 months of data, like 4 or 5 months of data that the S&P 500 was going down, but you could have still been printing money in this defensive stock. And then let's look at the early 2000s. In the early 2000s, I mean, this looks pretty impressive because out of all the stocks we looked at, I mean, look, this looks like it hit a high over here as the S&P 500 almost hit a low. And so, I mean, it was going up for what? Almost a year and a half as the S&P 500 was going down. So, yeah, I mean, GD can be a pretty good defensive stock. The only thing that does worry me about with GD is let's go on to the actual graph of GD. The thing that does worry me is, I mean, if you just look at the price, I mean, it's just been going up, basically. So unlike a lot of the other stocks, you're buying kind of at a high point, which could be a little bit more risky. Could be. But, I mean, you never know. I mean, if you had bought anywhere over here, though, I mean, you're also buying at an all-time high. If you bought over here, you're also at an all-time high. Who really knows how things are going to play out. But the stock has seemed to hold up pretty well in, market crashes. Yeah, so I think that about does it. I'm just going to go back to XLE. I mean, I guess another thing I discussed in a previous in a previous video was that oil. And, we can just look at oil really quick. And, I mean, oil has held up here pretty well. And, you only have to go back a few months and see, oil used to be at like $60. And right now it's at $100. So this is, I mean, we're still kind of at a 40 to 50% increase. I think in one of my previous videos, I've discussed that every single time there's been a 30% increase in oil for a few months, there's always been a recession. And we're still 40% above. And who knows if this isn't just going to shoot back up later down the road. And if that does, I'd expect to see XLE go back to its all-time high, which is over here. And it could possibly go above it, if that's the case. And I think it's likely possible we do eventually go back to these highs. So, yeah, make of that as you will. Not financial advice, obviously. But it does seem like it's at least one way to... Some of these stocks can be at least one way to make money. But you can still be in the S&P 500. I mean, if you look at the S&P 500, this has been a pretty crazy ride. And it's hard to even see like anything else that's been that aggressive upwards. I mean, you can't almost... I mean, it almost... Actually, if you look over here too, it does sort of remind me of this. Where, you know, S&P 500 did nothing, collapsed, came back up, collapsed, came back up even higher, and then started its tumble. It wouldn't really surprise me if we ended up mirroring this exact same behavior, but over here. So yeah, I mean, that's just sort of my short-term thoughts. I hope that was informative, and we'll see how things play out. But not telling you to sell every single stock you have right now and go into only defensive stocks, but it'd be wise to kind of assess the market, and if you do think there could be problems, it might be wise to go into these stocks. And not only that, but I mean, it's just sort of risk mitigation. It's like, if you were here, you would have just lost, you know, so much time and money. Even over here, like these drops are pretty difficult to kind of sit through. And I mean, is it really worth like risking not being prepared, being for one of these drops, if a drop is likely to happen? I don't know. I guess that's up to you to decide. But some of these assets I do own myself, so I'll just make that clear. But yeah, I think that's everything I want to discuss today. Thank you so much for watching, and have a wonderful rest of your day.